Carey Anne, how's it going? What are you up to?
Yeah, thank you for having me, John. It's going, I was telling you, life is good. So it's going well here at Loop. And in the
Yeah,
middle of launching a car insurance company that's going to completely disrupt all of car insurance in the United States. So, just the little things.
just a side gig, like something you're doing in your spare time. It sounds like, right? Yeah.
Exactly. Well, folks, when we were locked in during COVID, we locked in on building a car insurance company in the about 9 months to a year that we've been stuck inside and
Yeah,
required to be virtual. It has been a very productive time here.
that's awesome. And you know what? I'm going to start with a Canadian plug. Selfishly,
Okay.
Carey Anne Nadeau last name is a good French Canadian name. So,
Yes.
welcome to the InsurTech Canada podcast, and we welcome everybody. But it's always nice to see some of our friends or cousins stateside that have a little bit of Canadiana mixed in. So,
Oh, yeah. Half of
um,
me is Canadian. So my dad was born, bred, and raised in New Brunswick, very proud Canadian.
cool.
Whereas even though he is domiciled here in the United States, he rocks a Canadian maple leaf necklace everywhere he goes.
Oh, that's
Uh,
awesome.
yeah, born, bred, and raised on, my grandparents spoke French in our house. So the Canadian roots run deep, going back to like the 1400s. I think we have
Wow.
like many Canadians, the story about the women who were from France who were brought here to help
Mm.
France colonize
Yeah.
Canada. We
Yeah.
could trace all the way back to one of those. So very proud and very humble at the same time, Canadian.
That's really cool, and we have that in common. We both have New Brunswick
Oh, really?
roots. We talked about that before we went live. So lots of good people. So shout out to our friends in Atlantic Canada. Actually, we haven't hit that part of the country yet, believe it or not. Lots of startup activity happening, obviously in Toronto, in the West, also the prairies, but we just
Mhm.
haven't hit Atlantic Canada yet. So that's a call to action. Anybody out there who's in Atlantic Canada who's listening, give me a call, send me a DM. You can talk to Carey Anne afterwards. I'm really nice. I don't do anything underhanded on this podcast that
Well, if
actually gets published.
that doesn't get cut. Well, if you could believe it, Loop. So my company is called Loop. It's a car insurance company. We could talk a lot
Yeah.
more about what Loop is doing, but one of the big things we're doing is, hiring during the pandemic has meant that we can be much more expansive in our hiring call. So we too have made it to the prairies of Canada. One of our data scientists, Lynn,
Love it.
uh, spends quite a bit of time on the weekends going out and RVing and fishing and enjoying the Canadian prairie lifestyle. And
Yeah.
we also have our head of content, Nick, who is based in the Toronto area. So
Fantastic.
yeah, it's been actually great to get a few Canadians on board as well at Loop.
Yeah, and you know what? The 49th parallel, the line is almost invisible. Like obviously, governmental stuff and everything else. We do have a border, but it's one of the most open borders in the world, and
Mhm.
I'm very proud of that. And I've worked for a U.S. based company in my past, spent lots of time in the U.S., and I think we complement each other very well. And in a lot of cases, you have Americans and Canadians sitting in the same room. You can't even tell the difference, right?
Yeah.
The odd person maybe say a boot or finishes their sentences with a, or y'all is usually the American hallmark. But other than that, we're really kissing cousins, right? So
Yeah, man.
um,
Toronto, though, they got a ton of slang. You're teaching us all new. The
oh
Toronto
yeah,
slang is like infiltrating American culture. So a lot of our
yeah.
memes and a lot of our social content also is starting to become a little bit more Canadian.
Well, Drake, yeah, I think Drake deserves a lot of credit for that actually, and
For sure.
there's a few up and coming musicians that have come out of Toronto, the Greater Toronto area, that have made it
Absolutely.
big south of the border. I'm curious before we get into shop talk, like, what did you have for dinner tonight? Was it anything interesting?
You're looking at a cup of coffee. It's pretty much the dinner
Oh,
choice of most founders.
okay,
Uh,
yeah, I'm with you.
yeah.
Yeah, yeah,
No, we're based out of Austin, Texas, so everything is tacos here.
yeah.
Um, you can have a breakfast taco, you can have a lunch taco, you can have a dinner taco, you can have a dessert taco. It's, you can go weeks without eating anything that isn't in the form of a taco.
Right.
Uh, but we're founding this business in the last year has been an absolute whirlwind, really trying to build a company very fast to take on some of the incumbents. It requires speed, really, to give us a fighting chance to get a product into market with a limited amount of investment capital, get to a point where we can get more investment capital on board to grow, and then also to like take a run at the throne, right? Because once the incumbents catch on at what we're doing, we expect that it will be transformational to the auto insurance space. And so just keeping our heads down is our greatest priority right now, is the speed required. So I will say there's a taco truck that sits right across the street from where we live. So 9 times out of 10, we are picking some flavor of taco for dinner, but I haven't yet gotten there. It's
all about efficiency. I was going to ask you if you're into the intermittent fasting or not, and I'm black coffee is easy, right? You can get it anywhere. You don't have to worry if the cream is spoiled or anything like that. You just take it and go, and there's 0 calories. So
yeah, I think founders by default end up intermittent fasting, perhaps not out of choice.
Yeah, by circumstance a lot of the times, for sure. Yeah. So this is an interesting. I don't always position it this way, but just to kind of stay on you here for a second, because I always find it interesting the type of people that come into insurance. And no one really plans to get into insurance. So, like, what did you want to be when you grew up? Some of us, like me, I'm still trying to figure that out. But 2 decades later, I'm still in insurance. So, what about you?
It's a funny story. It's a very twisting tale, like many folks in insurance. When I was a little kid, you aspire to be like your parents. And my dad was a rock and roll drummer. And my mom worked in a grocery store for 47 years. I had not a lick of musical ability. So I wanted to be a grocery store clerk. I wanted to be the lady that scanned the groceries at the grocery store. And God bless my mother was like, maybe you dream just a little bigger for yourself, like set your sights on something that might, eventually require a college degree and have a career ladder that helped to afford you a greater or a better lifestyle. So I quickly, not quickly, I still have the dream that one day I'm going to retire and I'll stand at the checkout line and just talk to people, because
go after it.
If you're infinitely wealthy, that's all you need is community of people to like get to know and have conversations with. So one day when I retire, I'll live the dream. But my career started in, I was inspired initially when I was a kid. I used to watch Saturday Night Live. I would tape it on Saturday night and I would watch it Sunday morning. And then I would watch the Sunday morning political television shows, because both of my parents worked Sundays. My mom worked in retail at a grocery store, so Sunday's a really busy day. And so I was a little bit of a TV, based kid on Sunday mornings. For a bowl of cereal, Saturday Night Live, and Sunday morning news. But I got really into these like political talk shows. At the time, I was like, why isn't it that any of them use any facts whatsoever when developing their opinions? And here we are 20 years later. I have not made any progress on solving that problem, but it did set me on a course that like brought me to Washington, D.C. for school.
Cool.
Yeah.
And you studied poli-sci, didn't you study poli-sci? Yeah. Okay.
Yeah. Political science with a focus in public policy. It is now the most popular degree at George Washington University. At the time I went, there were 7 people that graduated with my major. So the times have changed. This really tells you how much data we now use in our decision making. Whether or not it's made it to the political talk shows yet is a whole nother story. But certainly the field of public policy and decision making and the amount of data that are being generated by state and local governments or public agencies vastly exceed what the previous generation had at their disposal to make decisions. And so much more interest, excitement in data science and data analytics as it relates to policy making and decision making in general. But that's kind of how my career started. I thought that I would be a data-informed talking head on political television shows. And that didn't quite work out, partly because I got really into coding and really into
Yeah.
geography, and that sort
Yeah.
of took me in a different direction where I honed more of the technical expertise versus the marketing and the sort of
Yeah.
sitting in front of the camera. I kind of prefer to sit behind my computer most days.
Right, right. Well, that's a fascinating story, and I think the great thing about insurance, why it attracts so many people, there's endless opportunity in insurance, and you do have the ability to use your skill sets regardless of what you studied in school. And there's
Mhm.
this misnomer that you have to get a job in the field of study. And like, let's face it, like if you're into politics and government relations and policy making, insurance is a highly regulated industry, right?
Absolutely.
So there's a lot of government liaising happening, and we're always having to understand, and it can stifle innovation. Actually, the regulatory thing as a whole, I'm going to do a series on that, or at least
Mhm.
a group chat around just how that's used as a favorite excuse for insurance not to innovate,
Yes.
and it just stifles innovation, as a matter of fact. But so you can definitely, and I'm sure you could speak to how you can use those skills that you learned even studying
Yeah.
on running an insurance company, right?
I might touch on that absolutely because I
Sure.
got into coding. I got into data analytics, data science, predictive modeling, and I think is a tremendous moment to be in insurance because insurance will have to, whether they go kicking, screaming, and otherwise resisting
Yeah.
into a modern era that is much more data driven. And the good news is if we can all lean into this reality,
Mm.
is that there's a lot of really great talent out there right now that
Yeah.
have a similar background to me that maybe didn't go the path of getting a risk management degree or seeing themselves in insurance from day one if they didn't have a parent or a
Mm.
friend or a colleague that exposed them to that career path, but who have the discipline and the skill to sit in the seat of an underwriter, an actuarial scientist, or an executive to make decisions about how to bring more data into decision making, how to bring new technologies into insurance. It is actually a fantastic time to be in insurance if you have this skill set because your
Huge.
ability to ascend through leadership and to
Yeah.
really demonstrate the value that you bring to the organization, the bar is very low right now, and
It
it
is.
will get better. I believe that through the example that we set at Loop, that like using data is actually
Mm.
more profitable for your organization and better for consumers, that people will follow. But it is
Yeah.
interesting how we find excuses. I appreciate that you use that word. It is
Mhm.
regulators are kind of this demonized other, and they don't particularly like to be social in terms of being on podcasts or being opinionated on social media because
I'm
they
going to
have.
change that. Keep
Yeah,
going. Yeah.
I think a lot of people want to, but the reality
I
is
know.
that like
They have a role to play.
government, yeah, they have a role to play, and like preserving their independence and preserving that personal privacy is a kind of lifestyle of why they're in government to begin with.
Sure.
If they
Sure.
kind of wanted to be in front of the firing squad, they may have become an entrepreneur and then
Yeah.
their perspective would be different. But like
Mhm.
culturally, I appreciate the role that they play. The reality, though, is that actually corporations have much more flexibility in terms of setting guidelines and setting rules for ourselves, and
Yeah.
we've really dropped the ball on really evaluating, for example, AI and insurance, how
Mhm.
we do that ethically and setting a standard for the industry to
Mm.
follow and to hold itself publicly accountable to. Because we've said, oh, well, like, we're just going to sit behind the curtain of Oz here and nobody can
Yeah.
really pull back the curtain. And the regulators don't let us like really do what we would like to
Mhm.
do. And so it just perpetuates a status quo with no
Yeah.
inspiration for change, there's no like a lighter, there's no flick, there's no like flint to
Yeah.
actually light the fire under anybody to change until I think a non-incumbent comes in from the
Yes.
outside and says, hey guys, like you're the last ones to the party here, and that leaves a really significant market opportunity, a really big door open
Mhm.
for a company of like Loop to walk through that says, hey, we got all the data in the world. We got great
Yeah.
talent coming in who know what
Yeah.
to do with it. And we're not going to follow the rules as they're written. We're going to look at regulators as allies and say,
Mhm.
hey, here's our AI, here's how it affects people of color, here's how it affects vulnerable groups, here's how it affects people who are poor, here's how we believe that this is going to benefit, frankly, a lot of these communities. And we find that the regulators become allies in setting and establishing a new era, frankly, of what insurance could be.
Amen. You know what? I believe it will take a disruptor, and it has to be a disruptor, because the alternative is regulatory changes, which is what the industry currently responds to. And the regulators aren't in any rush, at least in my country, to change the status quo. They talk about things being better, but they leave it to industry. And the industry, I firmly believe, needs to be disrupted. I'll take a quick example from another industry, TikTok. And you and your co-founder, I want to talk about John at some point, because we should at least just mention his name. Yeah, we won't even say his last. We won't even say his last name. We'll just
probably just search John on TikTok. You probably find him.
Yeah, exactly. But there's a company that there's a lot of Chinese government ownership and data leaving, and we're releasing that data to unknown sources. And you and John talked about in a co-CEO podcast that you guys did a conversation about how there are already examples, use cases of connected insurance in China that are doing very well because they have so much access to data, because they don't have right to privacy like we do. And so where I'm going with that is we can use that as an example to say, there's already business models that exist. Here's an example of how we don't want to do it, but here are some good things maybe that we could take from that, or that could potentially be a threat that finds a way to penetrate into our market. And if we don't start working on this problem, and I think that's something that a regulator should care about, so that it's not happening to them, but it's something that they're participating and collaborating with industry on. If that makes any sense.
Absolutely. Yeah. So to set a little bit of context there, my co-founder and I'll let it leak. His name is John Henry. He's a fantastic community organizer in social realms. I've been recently referring to him as the Barack Obama if Barack was born on the internet. You sort of have this ability to inspire and to educate, but also to build a movement behind the mission of what you're setting out to do. We were on this podcast, we were talking about AI and AI in China and how, frankly, unregulated it is, and that you have a data extraction mechanism, much like an oil refinery, right? If you pull everything out of the earth, there's not much left, right? Like there are negative consequences to over extraction, but in the case of China, data is the fuel that goes into machine learning, and so allows Chinese companies and the Chinese government to learn a lot faster than everyone else, because frankly, they don't have as you mentioned, the limitations on data privacy and data security and the assurances that you would have to provide consumers that you would in, say, the United States or Canada, or the European Union, which is even more strict on these measures. And so there's a competitive advantage that Chinese companies face that says, okay, if we have an unregulated industry that we can grow at breakneck pace without any limitations. You look at the US example, I think that the US can compete, but the requirement will be consumer trust. And there are a lot of companies that are still following this Chinese economic model that say data should be extracted at all costs. We should suck the earth dry of all of its oil, and bygones be bygones, all of the negative consequences that come from that exploitative act are not our problem. We're only really looking at the profits that come from the benefit of having the ability to extract that resource. How I think about it is totally different. It's a completely different paradigm, which is that data can be used to enrich and to grow and to build trust with folks, because intrinsically, we all want to make really good decisions for ourselves, for our families, for our lives, and data can be used to help assist in that process. Our brains don't work so fast and so well as a machine might be able to process information that we're not necessarily ingesting at that speed or with that capability, and develop insights and develop suggestions for us that make us safer, make us live longer, help us make better decisions for ourselves. And so I think of data as an opportunity to build a relationship with a customer, to say, unlike a traditional, let's call it an incumbent insurance company, some competitors of ours in our space also use cell phones to track where their drivers go, monitor how they behave, and they act like these overlords. They're like, you suck at driving, you sped, you hard braked, like your rate's going to go up, like you're just a miserable human being. And the consumer in that experience receives that feedback from their insurance carrier. And what do they say? Like, fuck you too, buddy. Like,
and I'm pulling the plug. Yeah.
And I'm pulling the plug. Like, why would you set up a relationship that's purely exploitative, dismissive, rude, frankly? What the totally different paradigm is: use data to help people become better for themselves, because there's a desire to have that self-improvement. For example, Apple, although I have my misgivings with Apple, does provide you, they inspired the 10,000 step movement, right?
So
telling you, giving you that data to say you're at 9,999 steps, helped you take that one extra step to get to your goal for the day. And what did it ultimately mean? Well, better health, more active people. Folks were using data to make better decisions. I think of it that way. And it's a huge opportunity to build trust with consumers if you can demonstrate that you're acting in their best interest. Right. There are plenty of examples, but the most recent example of a violation of that, yet again, in insurance is Lemonade.
I saw that today. Yeah.
Lemonade's in big trouble. Not necessarily. What they did was a incredibly either criminal or incredibly naive. Like, anybody in AI knows, if you know what AI stands for, you know that biometric data is incredibly biased, and relying on it to do any sort of emotional analysis of people's faces will automatically make Black women look angry. Like, we'll tag them as angry no matter what. Like, it is not yet fixed in AI to be able to have race blind and gender blind biometric information analyzed using AI. It's just, we all know that it's biased. Like, it's the most elementary mistake you could possibly make, or you are just not completely naive, in which case you shouldn't be trying to collect this risky of information and control this level of detail about people's lives.
Yeah, it's like playing with fire. Yeah.
It is. It's playing with fire, and either you're dumb or you're criminal in this case. So I really think that the big problem for them is not that, their line of business is still succeeding. A lot of people buy their renter's insurance or their auto insurance and never interact even on a biometric level with their claims experience. So they'll continue to be happy customers. However, they have completely degraded public trust. No longer will you believe that giving your data to Lemonade, that you can trust them with that data. And that is going to be an important foundation on which the next era of companies are built, and something that we will never violate, or we will strive to have as a fundamental principle of what we do, is that you need to be able to trust your financial service provider. You need to be able to go into the bank and have a relationship with the guy who's going to give you the loan. Yeah. You need to go into your insurance company and not walk out feeling like you just got sold a used car that's a lemon that's going to die 6 miles down the road. Yeah. And what's worse is that you don't even know why you feel bad, because the transaction is so opaque that you have mistrust. Not even because you know how you're being screwed. You just know you're being screwed somehow.
It's full of ambiguity, and people don't trust their insurance companies to start with anyway. So you're not starting from a position or a place of trust. You said so many things there that were so important, and I know of other examples. And just because there's a new tool out there, doesn't mean you should use it. Just because there's a gun on the ground doesn't mean you should pick it up and start playing with it, right? And there's self-driving technology that I know of where, and I won't name any companies, but they don't recognize bicycles and bike racks on the side of the road. So they actually exclude them and tell the technology to ignore them. But imagine a cyclist on that street full of bike racks pops out. The self-driving technology won't recognize the cyclist, right? So then don't use that tool. Like, you shouldn't be doing that because you don't understand the consequences of using such a tool, right? So so it is a dangerous thing, and we have to proceed with caution. And I think there's something there. You said trust which is really important. I just wanted to touch on a couple things you said, and then we'll move on to more of the company stuff. But
sure,
along with trust, choice is also very important too, right? And I try not to insert too much of my individual opinions here, but I can't help it, right? Just like you, right? And so individual freedom is so important, right? And now, so it's like, I want you to trust me, but I'm going to give you choice. And so I can collect more of your data, and I could be more fair. There's a trade-off there, but you have a choice, and you can end this at any time, or you could take advantage of this situation. And I think ultimately where there's more choices available to consumers, that's the road to trust
absolutely,
from my point of view, right? So it's not just connected for the sake of being connected, because it's not always a good thing. And the last thing I'll say is, on the road to trust, like you said, don't give me a mirror and tell me I'm ugly or I'm fat, right? Or like, I don't go to a 12-step group so that people can judge me. I go to 12-step because I want to get better. I want to deal with my problem, right? So it's like, insurance needs to start thinking. And I like using scenarios, or I like to illustrate outside of the world of insurance to help people better understand, or even the industry. This is what success looks like. It's not like it hasn't been created before. There's other models that we can learn from. And where insurance is going to be less dysfunctional is when we become a little bit more like other examples, like, okay, I'll go to a program that will tell me why I'm doing the things I'm doing, and then give me tools to not do them anymore. Like, imagine that. Like, wow. So Loop, is that like, let's talk about, why did you guys start this company? When did you officially launch Loop? There.
Yeah. So the evolution of Loop began with the development of the technology, which preceded the actual incorporation of the company. But we developed, first and foremost, we work with state and local governments to build models that for every road asked, what is the probability of crash on this road based on what we know about that road? What is the speed limit? What is the physical nature of the road? How many lanes? What is the slope of the road? We looked at traffic volume, weather data. Is it raining? Is it snowing? In Canada, probably quite important. In Texas, not as much, although occasionally now with global warming. And we looked at one really important data set is the previous record of car crashes that happen. It's not perfectly predictive of the future, but when you combine it with all of these other data sources, you realize that car crashes are oftentimes just being in the wrong place at the wrong time, more so than they are people who are acting recklessly or dangerously or speeding or hard braking. Like, everybody speeds. I can know that from the data with quantifiable certainty. Everyone speeds. It's the guy going 116 that's the problem. It's the guy going 116 while talking on his cell phone on the most dangerous road in all of, your neighborhood. That is the problem. And so it's context that really matters. And that was not available to insurance carriers over the last 100 years. The data that they had available for all customers was things like your FICO credit score, or they could ask you what your age was, or your gender, or your home ownership status. They could ask these variables and get, with some relative level of confidence, a sense of how dangerous you were. But the data that are available to now are just vastly exceed and surpass, at rates that are ever increasing, our ability to know are you a person that might just be in the wrong place at the wrong time?
Yeah.
And are you the person that's now compounding that risk with behaviors that would otherwise make you a threat to others, frankly? Like you're actually making everybody else less safe because you're probably not just going to hit a barrier, you might hit somebody else. Right. So for us, that technology I developed with city and state governments. We sold it to the city of Chicago, LA, DC. We were going around the country, 27 cities ultimately investigated and invested in the product. And we realized governments are quite capable of doing algorithms at scale. Not every local agency has the capacity to implement, to actually affect change with that information, while places like Chicago could prioritize resources according to an algorithm. Gainesville, Florida was just in like a much different place. So we pivoted it into insurance, and I started hustling, pounding pavement, picking up phones. Like a lot of people in insurance know me simply because I got through every door and everybody said no. But I made enough of an impact in folks' mental perception of the technology and consciousness around it to say, what, you're probably not wrong, but the system in which you're trying to introduce a new technology is not ready or not capable of really incorporating this technology into the way things have been done. Practically, it would require them to have, cloud-based computing. Not every insurance carrier is there. Practically, it would require them to have a telematics-based business, which most consider a niche part of their business that's losing profitability. At best, they give folks a discount for participating, but don't really use the data or understand the data that they're collecting. It would require companies to want to have a more honest, transparent, and accurate relationship with their underwriting and their customer, which also disqualified a number of carriers. Yeah. And lastly, it would require them to go to state regulators and say, the way we've always been doing this, hey, we want to change the way we got to prove that we need to transition from this to now. And if there is something that regulators can be a little bit more generous with, it's these big shifts, because change in the space can't happen incrementally. You can't just add a small variable on top of a model that has credit score. Garbage in, garbage out. Our models today are full of trash, and the trash needs to be taken out. Right. So you really got to start with an overhaul of what the underwriting includes. For us, we got rid of credit. We got rid of occupation. If you have a blue collar job,
you're amen. That's music to my ears.
Yeah. Credit score. People will be blue in the face arguing with me over whether credit score is predictive of crash risk or not. I don't want to go into that that fight. What I will say is that there are data that are more dynamic, that are updated more frequently, that more directly measure the risk. So whether you believe credit is predictive or not, I have data that is more predictive. Conversation over. I don't really care. If you could do it better, you should do it better. So we got rid of credit, occupation, education. If you have college degrees from specific universities, you get additional discounts. No offense, Harvard doesn't need an extra 15% off on their car insurance. They got enough advantages in life. You don't need the discount. Homeownership. Homeownership is one that fundamentally I have misgivings about. We're all comfortable with this home and auto bundle. Cool. Flo has put that in our brain that's a really great thing. I could bundle my home and auto. But those who may not prefer to own their own home, who may invest in real estate, commercial real estate, or who may not be of means to own their home. They may be renters. They may be college students. They're systematically cannot participate in this advantage to people who have the means and have the ability or in a life circumstance where they can buy a home. It just it rubs me the wrong way at every turn, and also compounds the unfairness. So if you have a blue collar job and you didn't graduate college and you don't own your home and you have modest credit, you're screwed.
How do you dig yourself out of that situation? You don't. And you know what? We can do better as an industry, and there's no more excuse to not use better metrics to evaluate risk. Because
that's where we're at, man. Yeah.
It's friggin' there, right? It's right there. So it sounds like you tried to, and stop me if I'm getting this wrong, but you tried to change the industry and work with carriers, you built the tech, you tried to get them to adopt it, but it just wasn't sticking because it's not their idea. It's someone else is convincing them. The regulator is going to take, oh, this is a big like about turn for us. You're pushing an elephant uphill. So is that when you guys decided, you know what, we're just going to launch our own insurance company?
Yeah.
Screw you guys.
Pretty much. Yeah, pretty much. I mean, if you can't beat them, or like if you can't join them, beat them, I guess. We're kind of flipping that script a little bit. It was early March of 2020, and it was right before the US closed down with the COVID outbreak. I happened to find my way, and testament to how many doors I knocked on and how much diligence I did and work I did in sales, but I ended up in Ajit Jain's office, which is Berkshire Hathaway, Warren Buffett. He was essentially going to ascend. I think he's now third in line to take over Berkshire Hathaway when Warren Buffett retires, but he leads their insurance business. And I got in a room with him, with his legal counsel, with his vice president of insurance, Peter Shelley. I mean, everybody who is the decision maker is most certainly at the table. There is no one except Warren Buffett himself that could have said, you know, it could have been a part of the conversation, because there's a lot of middle management in insurance, and a lot of conversations you do have are spent convincing people that have no power or authority to buy. In this case was not the case. This guy had all the money in the world to buy this, and he said no. And the reason he said no, he said, look, Geico, Guard, you're not going to change this. He used the idiom I hear a lot in insurance is that you can't re-steer the Titanic with an oar. But I realized I had an oar. And he was like, if you believe that it's right, start rowing in the other direction, start doing it yourself. And that's what's going to make this actually come to life. It's not just in your head, and it's not just convincing others, is that you can actually do it. And it was the kick in the ass that, like, unfortunately for Geico, will likely come to bite them in the ass, that I got that recommendation to go out and start a company on my own. Now, my background is in geospatial statistics, so I am very ill-equipped to start a commercial product, vertically integrated insurance carrier that's consumer-facing. So I asked my co-founder, John Henry, who has been a dear friend and partner for 4 or 5 years, to join me in this cause. And I'll say, he was convinced, and every other person that has subsequently joined Loop. We're now up to about 30 people on our staff, about to triple or quadruple by the end of the year. Every single person has been convinced based on the mission, not on the technology. The technology is cool. The technology is what saves us. But
that's how you start a movement, though. Yeah,
absolutely. It's 100% the mission, that insurance is incredibly unfair, is perpetuating systemic bias and injustice. It is the definition of institutionalized racism when you're using credit, occupation, education, and home ownership status to price a product.
Discrimination, in general.
It's baked in. It's baked in. It's completely baked into the cake. So for us, it's like, we're just not even going to consider that an ingredient. But fundamentally, what makes Loop meaningful to society is that mission. And I think a lot of people get inspired by that specifically, and something that we're, you're right, leading a movement, for lack of a better word, out of this era of financial services that haven't served everyone to an era where things look a little bit different.
Serve the people, right? And be a mosaic, like the people you serve. So what is, tell me a bit about John. Because John, from what I understand, is not an insurance guy either by trade.
No, sir.
which I love. I absolutely love that two non-insurance, traditional non-insurance people are coming into the space and disrupting and doing something new and getting amazing traction at it. So tell me a bit about John.
Yeah, John Henry, he is first and foremost a very proud son of Dominican immigrants from the Dominican Republic. So born and bred and raised in New York City, so a very proud New Yorker as well. And I think his career has been defined largely by identifying opportunities to both learn business, but also develop this really skill in communicating online via social channels and building communities. So his first business was dry cleaner. He started a dry cleaning company and literally like slugged bags of dry cleaning on the subway in New York City, ended up finding a niche in specifically in film and television. So he ended up washing literally the clothes of like Ninja Turtles, Wolf of Wall Street, Amazing Spider-Man 2, like all of these really cool, sounds really cool, but he was lugging bags of laundry as well. So it's, the lure of entrepreneurship until you start eating shit. You're like, it's not as cool as I had hoped. But
you take out a lot of garbage. Warning to anybody.
You do.
In case it's all sexy. Yeah.
Like Amazing Spider-Man 2 sounds great until you realize that you got to lug like, Ninja Turtle costumes on the subway. So then it starts to get real. But the reality is he was able to sell that business, start a incubator in Harlem that was focused on bringing economic opportunity to Harlem, starting and keeping businesses in Harlem, investing in businesses that wanted to be based in Harlem, parlayed that into some investment on his own, investment on behalf of a real estate fund, and then launched Harlem Capital before joining Loop. Was a $40 million fund to invest in women and people of color, where he deployed a bunch of investments in a number of businesses, including an insurtech, actually, our friends over at Wagmo, which is a pet insurance company. So he had some familiarity with the business model and the opportunity, but certainly did not come from an insurance background. Not only because I think insurance is quite incestuous in a way, like a lot of
I say that all the time.
Through family or friends. And his parents are very working class. My parents were very working class. So while we were quite proximate in New York, and I was born and bred in Hartford, Connecticut, which is like the insurance capital of the United States, neither of us had a network into people that worked in insurance. We didn't know people. We didn't look like people that worked in insurance. So it is a point of pride for us that a woman and a person of color, a Dominican American son of immigrants, is now leading an insurance company, because there is nothing but white men at the top of insurance companies today. That is the way it's been for the last 150 years, and nothing against those that have led very successful companies, but why not me? Why not us? Like, why not have a little bit more representation of society at the decision-making table? And I will say, we do have folks in insurance on our team. We very, very early on found a fantastic head of insurance. His name is Ed Arovis, who scaled an insurance company from 2 to 20 states in the United States, a company called Amalgamated. He had left the company, was happily retired, vacationing with his wife and children, and came out of retirement again, motivated on the mission. He's like, I've seen the inside, the underbelly. I know exactly how this shit is done. And I see he's thankfully also spent, before his career in insurance, some time in IT and technology. So he was the perfect fit of tech, like bringing technology to build a product that's fair and just. Like, I am all in. So we weren't so naive to believe that there aren't like things we need to know in insurance and systems and relationships with reinsurers and fronting carriers, and all of the ecosystem of insurance is still very relationship driven. So we're not so naive to believe. But we're also not so naive to believe we can just like show up and be like, all right, we're here. Like party can get started. Like, we're not like that kind of ethos. We need the institutional knowledge as well to be successful and to balance with our ambitions to grow and grow profitably. So we were grateful to have folks also early join the team that had backgrounds and experience in the insurance space to help guide us through that process. And I'm thankful we did, because we got an insurance product approved in 9 months in the state of Texas. It shows you the hard work that had to go into getting a completely novel program, like never before seen, including machine learning, including AI, approved in 9 months. So it's all testament and all praise and glory to Ed Arovis and his contribution to our team, for sure.
Yeah, talk about a fast track. And I always say there's good people in every industry, and there's no shortage of good people in insurance. Insurance does get a bad rap for a lot of stupid things they've done in the past. and even in the present, but it's still full of good people trying to do good things.
Totally.
And I'm glad you guys are on the job doing what you're doing. What made you guys decide? I'm sure you're probably tired of this question, but I have to ask, what made you decide to do the co-CEO thing?
Yeah.
And how does that work? Like, do you guys sometimes have to flip a coin or like throw a dart to decide who wins? Or does someone in the company that they like the designated referee that comes in as John's right today or Carey Anne's right today? How does that work?
It's like a marriage. Everything is negotiated and discussed and agreed. But we decided the co-CEOs because, and I'll be a little not Canadian in this moment, and I will lack humility to say that we are both geniuses at what we do.
Yeah.
We're both really at the forefront of our disciplines, and it takes both to run and operate a company that can both grow and do so profitably. It takes the underwriting diligence and the attention to the mathematical details that go into the data that we're collecting, the engineering required to actually operationalize some of our ambitions. And it takes a genius at the helm of marketing and at telling the story to our now loyal following that are starting to call themselves loop groupies, which we need a new name for that. But
Loopies.
Loopies. Oh my God. We need a better name. We need help with that. But point being
don't use what I just said. That was terrible, by the way.
Yeah, I know.
I was being a dad in that moment. Sorry.
That's what it is. Yeah, we got a lot of dad jokes here too. But my point is that like when you have two geniuses of two disciplines that are required to fundamentally operate the business, but also to see it grow, I think there was no reservations on our part that our powers combined could actually split the load in a way that made us go further than we would have had we prioritized one discipline over the other. It requires that both be present. It's sort of yin and yang, and it's an umami. You feel it when you're around us, that you have the sort of the practical and logical and the ambitious and emotional. You have the determined to go at speed and the diligence and the rigor to evaluate efficiencies where they need to be found. You have the storytelling capacity to just make you feel something powerful, and the technology to deliver actual trust back to consumers. There was no doubt in our mind, and it has continued to be really beneficial also for recruiting, to be quite honest, because we get the best talent to create amazing content. If our social media, if you follow any of the Ride with Loop handles on Twitter or on TikTok or on Facebook or LinkedIn or anything, the content is like fire. It's amazing. It's fun. It's like funny at times. It's engaging. We host clubhouses every Wednesday night. Like, we're doing things that are socially relevant and cool and powerful and building a community around us. And then at the same time, like, we're building some of the most advanced geospatial statistical models. There's no way John could recruit a data scientist to our team to be able to evaluate who and how and be able to build with confidence that we can deliver on that promise of a financial for services product that people can trust. So it also helps with making sure not only that the two geniuses at the helm are able to build and grow off of each other's talent to create like something even more powerful, but it helps us fill out our roster and our team of people with folks that are exceptionally talented and can really put like the team together to be able to actually get this rocket ship to the moon.
Right. You know, I love that dynamic though, and I imagine some days are better than others. I think it's a healthy thing. Like you said, like a marriage where, like, you know, you could convince yourself in life as an individual person to do a lot of things that are stupid. And we could probably all point back to things that we've done in our lives where we're like, why did I do that? But sometimes when there's like another person that, like, can you imagine two people had control over you? It's like, okay, I'm gonna bounce that off the second me. And the second me's gonna go like, no, because the second me has a different kind of brain, is gonna go, that's dumb, don't do that. right? So I'm sure you guys challenge each other a lot, and that's really cool, because if you have equal authority to make decisions, there's a lot of consensus building that has to happen, and probably a lot of compromise that is good for everybody. And there's no perfect model, but it's not. It's becoming more common, but it's still not the norm. And I wanted to mention it for anybody who was curious. So, and by the way, I don't think it was arrogant, and I'm paraphrasing what you said, to say like you're both geniuses in your area, because I think actually the decision that you came to be co-CEOs actually requires quite a bit of humility, to be honest with you, because like to say like, no, it's me, I need to be the CEO, and you're great, and I'll call you the chief, whatever, but I'm the top chief. And that, to put that aside, someone or both of you has to put a little bit of ego aside in order to share that. That's how I see it personally. So
I like that.
I like your take on it too. Yeah,
I am also going to reference that, because you're totally right. I think there's a lot of, when you see co-CEOs, your immediate reaction is, oh, it's a power struggle, that neither of them could have decided like who was supposed to be in power and make that decision. But it really is that conscious choice to share in this journey, and to be able to, there's enough work for more than two people to do. I'll tell you that much. To start an insurance company in 9 months, I don't think it would have been possible if only one of us could have made executive decisions on behalf of the organization.
Right. No, I think it's awesome. And you know, that it's on purpose. Whether it was conscious or unconscious, I think there was some humility in there. So I'm going to give you guys credit there.
Thank you.
So if you think about from a consumer standpoint, because like the risk when insurance people get together, and whether you realize it or not, you're now an insurance person. Sorry, okay, because you're running an insurance company. But you don't have as much baggage as someone like me. But I was always like a round peg in a square hole anyway. So that's why I kind of do this. But from a consumer standpoint, because when insurance people get in a room, sometimes we talk like industry jargon, and we use a different vernacular that people don't understand. So in simple terms, because we've talked a lot about, anyone who's following can understand why you did what you did, but if from a consumer standpoint, what problem is Loop solving, and like what do I get when I sign up with Loop? What's available to me, and how is the experience different? Just from a consumer standpoint, it doesn't have to be, a convoluted thing, but I'll let you say it in your own words.
I think when consumers make decisions, oftentimes they make decisions from how they feel about brands, right? Does Coca-Cola feel, or does it taste all that different than Pepsi? Not really, but we have some sort of emotional resonance, some childhood memory of Coca-Cola in our household, and we will always be a Coca-Cola household. Right. Now, with insurance, the problem that we're solving is that insurance carriers today go a mile wide, but only an inch deep with consumers in terms of building emotional resonance and really connecting with their customers. We have the opposite philosophy. We go not very wide, but very deep with our customers. We jump on the phone with them. We talk to folks. We engage them on social media. We have in-person events just to try to put a face to the name of the insurance product that you're buying. There's a reason why they put Flow out front. There's a reason why they use geckos and other, mascots and things and jingles to hook you, is because they want that sort of opacity in the relationship. They want you to have a relationship with, frankly, a fictional character rather than relating to you as a human. And I think that's where a lot of the mistrust comes from, is because you can't actually say, I bought my insurance from Carey Anne and John Henry. You don't know, and you don't even know what you've bought beyond that. You've entered a transaction that you feel much like buying a used car, that you got ripped off, and somebody's going to tell you how you got ripped off later after you've already bought the product. It's too late. Yeah. And it's too late. Well, here's the funny one. The the one thing that always gets under my skin is that very few consumers know that they can cancel their car insurance at any time and receive a rebate back to the day of the insurance coverage. So
Mm,
if you paid for a year, 365 days, and you cancel on the first day,
yeah.
they have to rebate you for 364 days. But nobody tells the consumer that. Why? Well, because they're like, we got your money and we don't have any plans of giving it back to you unless you find out that like it's actually yours and you're entitled to a full refund back to the penny of the day that you gotten. They haven't earned your premium until the
Preying
day
on
has
ignorance.
passed.
Yeah.
Exactly. It's preying on ignorance. And so educating consumers is part of our ethos as well, making sure they understand what they're buying and that they can cancel their insurance and come to Loop if they want to express their opinions as a consumer. That allowing them that choice that we talked about earlier, allowing them the ability to make a decision for themselves, a good decision for themselves, and show the power of the consumers back to the folks that have been trying to hold the power for themselves, and instead really use the power of our own wallets to say, no, this is the way that we want this system to work for us, is really it's not the problem that Loop is solving, but it's the opportunity that Loop is creating for consumers.
Yeah, and you know what? I hate putting it that way. You can tell I've had to pitch to too many VCs and insurance companies. Problem solution, right? Go to market. But really, in layman's terms, people just care well, they do care about how do you solve my problem, but that's not what they're thinking. They're thinking, can insurance be fair? Is that even possible? And I think you guys are demonstrating that is possible. Are you focusing exclusively on auto? Because I read somewhere that there's more to come.
There is always more to come. Now,
but is there something coming soon, or are you that you could talk about? And if not, just say shut up, John.
No, John, you're more than able to ask, and we can be more than transparent about what's coming next. So first, we're launching personal auto only. So if you have a car and you need car insurance for yourself or for your family, that's the product you're going to be able to buy. All suite of BI, PD, comp, collision, roadside assistance, UM, all of the coverages that a traditional insurance carrier would offer. But we're pretty thoughtful about who our customers are. Be able to buy in the state of Texas, which is the first state we're launching in, have ambitions to be in 5 states by the end of this year. So folks in Ohio or in Pennsylvania or New York should join the wait list immediately so that they can get into our pipeline and start receiving emails and value and opportunities to be engaged with us ahead of launch. But our next ambition is to follow the needs of our customers. And there's 2 things that our customers we know probably need in addition to their car insurance. The first is renter's insurance. So we will likely upsell on renter's insurance so that you can cover the cost of your things. Keeping in mind, we're one of the only insurance carriers that doesn't have the home and auto bundling option. We expect a lot of renters to come in our direction. And so we want to make sure we're taking care of some of the basic insurance product needs that those individuals have. But beyond that, I think we will likely expand. We expect a large majority of our customer base to need full coverage because they have a loan on their vehicle. They may not own their vehicle in full and outright. And I think auto lending is a space that we have our eyes on because it is another predatory market where, when the housing and financial crisis happened here in the United States in 2008, like predatory loans just didn't go away. They actually moved to auto. You could get no job, no credit, no whatever.
Ninja loans. Yeah.
Essentially, ninja loans in auto.
Yeah.
Exactly. And so we expect that there's an opportunity there, particularly when partnered with a insurance product. We can ask our folks to get gap coverage, which covers the downside risk of defaulting on the loan. And we do know that we will know which customers are least likely to be involved in a car crash. So to have total loss of their vehicle and required that we pay out on gap coverage. So there's efficiencies in the combination and in the bundling of your auto insurance and your auto loan that we're looking to exploit, not necessarily to go verticalized and offer homeowners or offer, just stay in the insurance vertical. We're really following what our customers need and the customers, not just insurance needs, but financial services more broadly.
That's awesome. So thank you for that kind of view or foretaste of what's to come. So on that topic, you guys have done some fundraising, and so I heard you guys talk about ambitions for an IPO. What stage would you say you're in, and what's the timeline on becoming a public company?
So by the time the podcast airs, we will be in market selling products in the state of Texas. We have sold our first policy. We sold a few policies just to test out the system and get data flowing through, but we'll be live and in the market for all of our eagerly awaiting loopies, loop groupies, whatever we want to call them. There's about 30,000 people on our wait list right now who are waiting to sign up with Loop. We're super stoked about, and that list grows every day. But folks will be able to buy auto insurance. That's our primary goal in the short term. We have raised capital, so we're venture-backed business with expectations that we'll scale and grow. But I think what we're most proud of is actually our reinsurance capacity. Reinsurance markets, unlike venture capital markets, are less motivated based on the story and the ambition and the cool founders and their degrees. They want to see the numbers. They want to know that the technology works. Exactly. So going to the reinsurance market, we were able to secure reinsurance capacity, a $30 million deal for Loop to sell auto insurance with an A+ rated German reinsurer, multi-year deal. So there's some security that they will be our partners at least for 2 years, probably for 4. And so we feel pretty proud to have such great partners going into the market, both from a venture capital perspective, where we feel like we'll have the capacity to grow and get to those additional states where we'd love to serve more customers, but also from a reinsurance capacity to know that we're backed by, just the industry's best.
Right. Is the ambition to be in all states, all 50 states?
Yes. So the ambition is to scale nationwide, and we'll go state by state. So there's unique challenges in different states.
Sure.
Some states are more crash prone than others. Some states we have a lot of fraud, where some of our data can be used to detect things like stop and squats, where somebody jams on the brakes in front of you and you hit their rear end and it's actually an insurance claim.
Staged accidents,
Staged accidents, exactly. In other places, we have weather conditions like fire and hail that we need to be mindful of. So we're being pretty judicious in our rollout. We'll probably be in 10 states likely by the end of the year, by the end of next year. 2022 is the plan right now. So we'll see.
Will you go for another round, or are you? It sounds like you're focused right now, bringing the product to market and building scale, which is where companies should be focused, right? It's too many. A lot of we talk about this on our podcast quite a bit, and then some of our meetups where there is a risk as a startup founder to get distracted by the whole fundraising process, and sometimes that can become more of a focus and a dangerous focus. And maybe that's something for another conversation someday, but maybe is that something that you guys split up? And where would you say you are in that journey? Because IPO is down the road, of course, right? Would you be because I want to use this as an opportunity. If you want to announce any intentions that you have an open round coming up, feel free to throw that out there into the stratosphere.
No announcement just yet, John. Appreciate the try to get the scoop, but we will be. We are a venture-backed business. Our current investors expect us to take on more capital to grow fast. So there will be more news in the future, but none to announce today.
Fantastic.
And I hate to cut it short, but I do have to get on the phone with an investor. So
no, that's good. So let's wrap with this. Let's wrap with this. What do you want Loop to be known for when folks hear about Loop?
So many things.
Yeah.
But I think the biggest thing is that we were courageous enough to take on an institution where we started as the small fish, but we can show everybody else the way out of some of the circumstance that we find ourselves in today, where insurance is not fair, it is unjust, and we're showing folks that there's a path to make financial services more generally an honest transaction with folks. I would love to be remembered for whether we're an IPO company or the biggest insurance company that ever existed, that we made a meaningful impact on a lot of people's ability to get a fair shake at a price in insurance, and for themselves an opportunity to achieve both physical mobility, because what we're selling is a car insurance product, right? That they can go places, but at the same time that is so intimately tied with financial mobility as well, and upward economic mobility for individuals and households. So we have this small product that's a car insurance product, but really big dreams of what that will mean for people.
I love it. Well, you got to dream big, right? And good things will happen. And I think you've got the right team in place, and you've got this infectious energy, which I've been feeding off of this entire time. So where do we find you if folks want to get on the wait list?
Ridewithloop.com. By the time the podcast airs, you can check out our prices. And if you're not in a state where we're selling it, it'll sign you up for the wait list automatically. So definitely ridewithloop.com. And then the other thing is check out social, like engage with us on social. We have a community manager, much like yourself, that keeps folks engaged and has conversations and answers questions. Our customer service team is all in-house and ready to talk to folks who might have questions or concerns or want to understand a little bit more about Loop. So there's many ways to reach us, but the great place to start is Ride with Loop, or reaching out to me and John Henry directly.
Fantastic. I love that. And you're very accessible. So thank you for sitting down with me today. You got to promise me that we're going to do a follow-up then, because post-launch, I want to sit down. Maybe we'll invite John. I don't know, but he can kind of sit and watch from the outside, or we can invite him to the big kid table, right?
He can be a honorary Canadian for the next one.
Yeah, I would love to have John and you, and just to follow your story. Thanks for doing what you're doing and for sitting down with me today, Carey Anne. Really appreciate it.
My pleasure. My pleasure.